Prabhudas Lilladher now joins in. Good afternoon, Ajay. Ajay, I first wanted to come to this fact about earnings. At least in the last 6-7 years, the data that we've pulled out shows that earnings at the start of the year are very, very strong, or are expected to be very strong once they are introduced, whether it was FY14, FY15, FY16. That's about 12 to 18 months back before these earnings get introduced. But then, as we actually go throughout the year and come through the actual number, the earnings get revised quite significantly. Do you think that's the big worry, the story of the earnings, which has just continued to see downgrades for the last 4-5 years?
I think that's true, because when we started the last financial year, FY15, I think the market was penciling in between 13 to 15% growth in earnings on a YOY basis. And as we ended the year, I think the numbers clearly indicate that the growth has been a measly 1.7%. In fact, as late as before the start of the fourth quarter earnings season, we were expecting to end the year with 4.7% earnings growth. And the numbers have been tepid, and hence we are ending up with only 1.7% earnings growth, with a nifty earnings of only 412 rupees. Coming to your question about the prognosis for FY16, I think the market even today, I think, is factoring in roughly 16 to 18% growth in earnings for FY16 and an EPS number of around 487 for Nifty for FY16 and a further growth of around 17 to 18% for FY17. When all of us know that the first half of the current financial year, the growth in earnings will remain tepid, and an improvement in earnings will only be evident in the second half of FY16 and following it also on FY17 with a revival in investment cycle. I think the government is front-loading a lot of expenditure. We have seen the April expenditure for from the government be one of the highest ever in an April month. And if you look at the gross fixed capital formation numbers, even they are showing a slight perk up. And our interaction with corporates is showing that the MCVHC numbers also coming out to be very strong. The green shoots are visible in sectors like mining. So I think we'll have to wait it out for one more quarter, and it will only be in the September or December quarter that one can see earnings coming back. But even then, the 16% growth in earnings that the market is today factoring in 16 to 18% for FY16, I think one will have to temper one's expectations, and in case the monsoons were to turn out to be deficient, then certainly there would be a case for moderating the optimism and bringing it down a wee bit.
Right. Your point that you made about monsoon, say if there is a problem as far as monsoon is concerned, you think it's going to be a very big issue? I mean, second, third straight year where we are seeing lower than a normal monsoon. Do you think it can have very big impact, especially on the rural economy?
Yeah, I think the deficiency in monsoon is to be seen in the context of a delay in monsoon last year, and I think a large-scale destruction of standing crop in the Rabi season that just went by. So this is the third consecutive hit that a farmer would have to take, and that is what is making it so much more pressing. You mentioned about the impact on rural incomes, which is clearly evident in the FMCG numbers that one sees and the commentary that one hears from some of the FMCG companies that primarily derive the demand from the rural sector, that there is a slowdown clearly evident. Now, what measures the government puts in place to alleviate those weakening impulses is what will have to be, is what sort of the market would be looking forward to. But as I said, I think on the other side, what the government needs to do is aggressively push the program in terms of capital expenditure is concerned on the roads and railway side. I think 70,000 crores of additional capex has been lined up by government in roads and railways. And the Honorable Minister of Road Transport just a few days back mentioned that 3.7 lakh crores worth of tenders will be out in the road sector over the next 6 months. So I think this has also been corroborated by quite a few road contractors who are talking about large-scale tendering to come from NHAI and Ministry of Road Transport to be supplemented by state government expenditure on the roads, which has a multiplier effect of nearly 5 times as per the economic survey in case of railways. So I think the investment-led demand needs now to really kick in 6 months from now to take care of any slowdown on the agriculture side.
Ajay, I just wanted to understand, third straight or the fourth straight hit as far as farmers are concerned. See, one side of it is, of course, inflation. There can be, some measures to reduce that. There can be, some sort of sops that can be given for that. But say if there is a water shortage, what can be the impact on industrial growth? Can it be something that which can be measured?
Well, I think yes, the levels of water reservoirs are sort of pretty evident for everyone to see. But I think one has to wait and see what is the spatial and temporal distribution of monsoons. So there is no need to panic right away, because one has to see the spread of the monsoons. So although one knows that I think the monsoons are going to be deficient, but which areas, whether the deficiency is in those areas which typically are irrigated or are non-irrigated areas. So that's why I think I don't want to jump to a conclusion and would like to wait and see the spread of monsoons, how it happens.
It's 167 points down for the Nifty. A hint of 15-20 points recovery coming in, but I think it will get sold into 2% decline to 8265 levels. Again, not looking a pretty picture as far as markets are concerned. It's been very, very volatile, and majority of the times any recovery has been sold into. Ajay Bodke is still with us. Ajay, I just wanted to understand, after the policy, why did the market sell off? I mean, you think that people were just waiting for that event and no major positive surprise coming in, and then that extended sell-off?
No, I think the reason why the market sell-off essentially is because of the hawkish tone that the market perceived that the RBI has adopted, which basically means that the market were expecting that the extended pause that the RBI is implying would not happen. And what RBI essentially has said that, look, the fuel inflation is at 12-month high. Food inflation numbers, they revised upwards by Jan 16, they're expecting it to perk up to 6%. And their own corridor of 1.5% to 2% of real rates, to maintain that corridor, if suppose by Jan 16 the inflation were to perk up to 6%, you add 1.5%, it becomes 7.5%. So your repo already is below that. So I think what basically it means is that for an extended period of time, if the corridor of 1.5% to 2% of real rates is to be maintained, then there will be no rate cuts. So the only way rate cuts can happen is if the largest contributor to the CPI, which is food inflation, were to come off, which basically means the monsoons have to be normal, or fuel inflation were to come off from the sharp rise in fuel prices that one has seen globally. Albeit they are far lower than where they were a year back. So I think it is this dynamic which sort of in the market took note of, and hence the sell-off happened. It is essentially a signal that there will be an extended pause and no rate cut for some time to come.
Right. How big a impact would no rate cut for some time to come would have? 75 basis points has been cut right now. Nothing has been passed. I mean, no, lending rates may come down, but if 75 basis points have been cut, and you can't expect further rate cuts just to come in.
Yeah. So I think so that's what sort of I said. What is important is that what kind of monsoons do we get? It's extremely crucial, more than ever, that the spatial and temporal distribution of the monsoon has to be adequate. That's the first thing. And secondly, although there is still a slack in the economy, many industries today are operating at 70 to 80% capacity utilization. So any recovery in demand will not necessitate large sort of capital to go in. So there are two issues that market will focus right now. A, obviously the monsoons, but more importantly, I think the government expenditure in roads and railways, and what multiplier impact does that have on the demand in the economy as we go forward.
Right, but how would you look at the earnings that we earlier spoke about, the overestimation that the markets seem to be doing? You mentioned that 19% is the earnings estimates that the street has, which has a downward sort of a tick. You think that estimates for FY 17-18 also should be revised down, because every time we start with a 15-20% sort of a growth and then largely end up at about 5-6%.
I think on the lighter side, analysts are an optimist bunch. So you typically tend to start the year expecting that sort of everything sort of should go the way you expect it to, and then sort of you have a reality check. So again, I think as we head into FY16, I think as I mentioned, there is still a consensus expectation of around 16 to 18% growth in earnings. And now I think, people are expecting it to be back-ended. So the June numbers also will continue to be tepid, and that is the time when the reality check will set in my opinion, and the first moderation or tempering of the numbers for FY16 will start happening.
Right, Ajay. Thank you so much for joining us here this afternoon. Hope you have a great day.
Thank you.
Going ahead. Let's take a break.